Hello and welcome to this short demo of Volcube. Volcube teaches students to trade options through simulations and gamification. The platform bridges the gap between options theory and practical application. In this video we are going to walk you through the key sections. On the account page, tutors can easily track the progress of their students. Their scores can be downloaded to an Excel spreadsheet with the click of a button, and tutors have the ability to jump between groups if they are running multiple courses. Under the Learning tab, students will find over 100 articles and 24 short videos covering many relevant topics. Some of the key ones are options trading strategies, Black-Scholes pricing model, the Greeks and general risk management. Volcube works best when paired with a tutor, but also accommodates self-learning. As you can see here, we have a list of articles that focus on using Volcube and its gamification elements to improve one's knowledge of options. The students can apply their knowledge in 3 different areas. The first and simplest comes in the form of options mini-games. These games are comprised of quizzes, which cover 10 different topics and can be played endlessly. To score 100%, students must correctly answer 25 questions in a row. Feedback is offered after every question, and as you can see on the right hand side, students are given help on the quiz in the form of tips appearing here. Directional games are the second area students can apply their knowledge. These games are a step up in practical application and introduce the key aspects of portfolio construction and risk management. The Payoff Finder game will task students with selecting the correct trades to build benchmark option strategies that match the payoff profile at expiry. The Portfolio Builder game will be the first time students see an options pricing table. Through this game, they will build portfolios of options that match the payoff profile at expiry. The Hedge Finder game is focused on risk management. As they move through the levels of the Hedge Finder game, they will initially hedge exposure with futures and then with options. In the final level, they will need to delta hedge options with futures. The main tool for practical application is the Market Making Simulator. This is accessible in multiple formats, and we will cover 2 today: the levels and the custom play feature. The levels section is broken down into 10 levels, increasing in difficulty and realism. In level 1, the most simple level, students will be pricing outright options and the only moving variable will be implied volatility. To move from one level to the next, students must score an average TPI over a number of games. The TPI is the Trader Performance Index, and this ranges from -300 to +300. We will talk about this statistic in more detail when we look at the analysis page. As mentioned, we also have the ability to create custom games. As you can see here, I have total control over the game's variables. The setup of the simulator, as well as the price action through the games, is designed to replicate a live market. All price action is created from an algorithm. It is not canned data, and so no 2 games will be the same. If we go back to the levels and begin playing a level 1 game, you will be able to see how the students interact with the simulator. The student will trade with a broker using the messenger window. As the market maker, they will offer bid and ask prices as well as quantities of the options the broker wishes to trade. At the start of the game, the pricing sheet is deemed to be accurate, but once the game begins, implied volatility will start moving around. Students must use the flow of the broker's trades to track movements in implied volatility. They can use the Implied Volatility Manager to update their pricing sheet. The broker acts as their view on the market. If the broker is buying options and going long, the students should assume they are underpricing options. This means they must increase the implied volatility and therefore option prices to promote the broker to start selling. Students must capture as much profit as they can whilst also remaining inside their risk limits. These limits can be seen in the bottom right hand window. Once the students have placed a trade, the corresponding windows will be updated. In the early levels, the students are automatically delta hedged, as you can see in their trade log. The spot price, which can be found at the top of the pricing sheet, is also held at 100. This is done on purpose so students can focus their attention on implied volatility. As they progress into the higher levels, students will have to manage their own delta hedging and also be aware of the underlying spot price moving. Once students have completed 25 trades, they will be asked to end the game and an analysis page will follow. On the top line of our analysis page, we have our Trader Performance Index. The Trader Performance Index is a score generated from multiple factors. The main ones considered are speed, accuracy, competitiveness, and the difficulty of the game. Next to this is our Trading Report button. The Trading Report breaks down each factor and offers some qualitative feedback. Under risk/reward, students can see their trades mapped off against P&L and the overall risk metric. This is also done for the students' accuracy and competitiveness. All previous games are stored under the history page and can be reviewed by the student or the tutor. Thank you for your time and I hope you found this demo useful. If you would like to discuss the platform in more detail, please email george.lake@thezishi.com. Thank you.